people are literally just using these graphics cards to try and mine Bitcoin. Now, if you've got a quantum computer that can do that in seconds, perhaps, then that's going to change things considerably.
Quantum computing is a risk to Bitcoin, blockchain, and crypto in general.
And I cannot stress enough how poorly formed policy and how poor the outlook is for the UK.
Could quantum computing kill the crypto markets as we know it? Welcome to The Market Edge, the podcast that gives you the sharpest trading insight on what's moving markets.
Now, if the phrase quantum computing melts your brain a little like it does ours, then do not panic, because we're here to explain it all to you. Whether it's going to be a risk to crypto and whether it's going to light up the stock market.
From cybersecurity to chip makers, we're going to break down who stands to win and who could be left behind. And believe me, you don't want to be left behind on this one.
Now, in other markets, bond yields are creeping higher. So what does that mean for your trading this week?
And don't forget to like and subscribe whether you're watching or listening, and you'll be served up with the Market Edge podcast every 2 weeks whenever it lands. But let's get going. Dave, let's start with the meme of the week. We'll get straight into it. This one it's on quantum computing. Now, I have looked at quantum computing over the last few days, and my brain does melt. So if you just to go back on what we said there, it's not a bad thing if your brain melts, because this is going to happen, right? But let's go meme of the week. It's Morpheus from The Matrix, and it says, "What if I told you quantum computers already exist and can break Bitcoin and blockchain passwords within seconds?" Now, we're breaking down this quantum computing, and when I was researching this beforehand, the key point that came out, or the key headline that we saw, was that quantum computing is a risk to Bitcoin, blockchain, and crypto in general.
Right.
Is that true?
I think there's absolutely no risk to quantum computing against the crypto market, Bitcoin, yet. I think taking advice from people that are way smarter than me and who actually understand this, what they're suggesting...
Sorry, there's someone that's way smarter than you?
There's like 4 people.
Right, cool.
But Jensen Huang, for example, you know, the CEO of NVIDIA...
Is he one of them?
He's slightly smarter than me, yeah. He actually said that it's going to be decades off before crypto can be kind of, you know, cracked by quantum computing. So we're not even talking, you know, years. We're talking maybe half a lifetime away.
Yeah.
By which time, I think things will have moved on considerably anyway. There might be, you know, even more added protections.
I mean, there's 2 points here that I suppose we need to stress. Number one, we're not here to tell you what quantum computing is and how it works, right? You know, because do you know how your iPhone works? Do you know how AI works? Not really. All we need to know from our perspective, and what we're talking about, is how it's going to potentially be a good investment for us. But as far as I can read, and putting it in the most layman's terms as possible, quantum computing is another way that computers read code, right? A more complex way that computers read code. Am I right or am I wrong?
Probably, yeah, that's probably the right way to put it. I think what they do is they do calculations that normal computers just can't do in certain speeds, basically. So they can do, you know, a computer might do in a year in maybe, I don't know, a day or less, you know, just using those kind of comparisons of a time frame.
And this is where we have this situation with Bitcoin, because the whole blockchain and Bitcoin is almost seen as the safest place for anything, because it's so complex in its code, uncrackable, unbreakable, and the fear is here that quantum computing can crack that.
Yeah, if in terms of how Bitcoin is mined, it takes a lot of you know, work effectively to be able to process that mining. That's why, you know, you've got warehouses filled with graphics cards out in Iceland, whereby it's freezing, and so there's loads and loads of power going through it. And people are literally just using these graphics cards to try and mine Bitcoin. Now, if you've got a quantum computer that can do that in seconds, perhaps, then that's going to change things considerably. But as Jensen Huang says, it's a very, very long way off yet. So I don't think there's any worry about quantum computing cracking Bitcoin anytime soon.
But there is a real potential in terms of what it can do from an investment perspective.
Absolutely.
But we will get to that.
Yeah.
There's a lot of that to come as we go on. Okay, so let's look at tweet of the week. Now, we were discussing this yesterday when we were researching. This is James Wynn. Now, he's got a lot of focus recently because he's basically in a massive crypto hole in his trading. So what it says is, they're coming for me again. Liquidation price 103.640. Buy the fucking dip. Don't let these evil bastards liquidate me. And then it's a picture of his account screen.
Yeah.
What's the story behind this?
He was $100 million up. Okay, he was literally $100 million
Which
up
is fairly good.
in an unrealized position. So obviously he's not taking anything off, and you can see there that his P&L is actually a negative $1.764 million. So he's managed to lose $100 million. Now, I don't like, taking the mick out of anyone because of this, but I think the most...
Is that true?
What, he was...
No, that you don't like taking the mick out of people.
Oh, no, I love it. But just on
exactly.
this podcast.
Oh, I thought it was just... Okay,
Yeah. But I think the lesson to take here is that these people get hailed online for taking risk like this. You can see there that he's leveraged 40 times on this Bitcoin futures position. Now, firstly, that's really, really excessive risk taking.
On Bitcoin?
On Bitcoin, yeah, exactly. The volatility.
We wouldn't say
excessive.
do that on the most, illiquid stock ever to take 40 times leverage. But,
The lesson here is that you shouldn't really take any example from these people that are doing this online. Number one, because it could be marketing. He's trading on something called Hyperliquid.
Yeah, and this is a brand new trading platform, right?
It's a trading venue that's decentralized. It's a decentralized exchange, kind of, which is ironic to call it decentralized because actually they have something called a market making vault, which means they're on the other side of his trade. So when Hyperliquid was when he was $100 million up, Hyperliquid were perhaps, if they hadn't hedged it out, in a hole of $100 million. So that tends to be how traditional, brokers, market makers work in this space, in the retail space. It's not, market makers provide a two-sided market.
Yeah, it's a bit different these days, but in this extreme example, very much so.
Yeah, there's a lot of risk. And funny enough, this exchange actually nearly went bust a couple of months ago, and they had to roll back all of the transactions. Yeah. Which, for crypto, that sounds very, very strange because it's meant to be immutable. That's one of the things that everyone talks about. And there was a trader who decided to try and exploit it on a meme coin called Jelly. So it's a very, very interesting story if you want to go and read about it. But I think the lesson to take from here is that that's excessive risk taking. It's pure greed. You're $100 million up. Sell at least 10% and realize 10 mil.
And I do think this is a really interesting lesson, isn't it? Because Twitter, TikTok, Instagram, social media in general is full of crap like this, right? Whether it's crap or not, but there is a lot of crap out there where people are pumping up things. Now, they don't usually highlight the fact that they're down, $1.7 million. But they're usually showing the other side where they're up $100 million.
Well, it's another thing as well I never, ever publicise my P&L online. The reason why is because that just invites unnecessary pressure. Yeah. What are you publicising it for? Yeah. Because then all you're going to have is people either saying, oh, that's fake. You're then going to either have the pressure on yourself to outperform that in public again. If someone then asks you, oh, what's your P&L now? Oh, what if it's worse? Oh, you're going to get stick. Yeah. If it's better, you've then got a higher benchmark to try and do. There is no upside. And so he's basically lost here because I think he's been up 100 mil and then he's tried to increase it and it's completely gone wrong. The market's
and also,
turned.
Unrealised P&L is unrealised P&L. If
paper.
I was living off the back of my unrealised P&L in my 25 years worth of trading, I wouldn't be sitting here doing this podcast.
No.
I'd be sitting on my own island somewhere.
Yeah.
It's unrealised P&L. Because trading mistakes happen, because everybody's human beings, and that's when unrealised P&L becomes losses or less P&L.
It's just paper, and you have to remember that half of I think actually more than half of trading is actually how you manage your exits. How do you actually take profit? It's a very, very difficult thing to actually do in a systematic way.
So, chart of the week this week, and We've got to look at the markets over the last couple of weeks, and even we're getting bored of it, which is why we don't really want to talk about it too much. But we've got to talk Trump and tariffs a little bit, because there was court rulings on, and our chart of the week here is obviously on bond yields, and we'll come to the crossover here. But there was court rulings that Trump, basically Congress, are the ones that are able to dictate trade policy rather than the president himself. So courts in the US came out and said the Liberation Day tariffs were basically illegal. So we're in a current situation where the Trump administration is trying to look at a different way to put these tariffs on, which of course it will. And then that'll be another wave of market movement, of course. But what's going on in terms of bond yields? Because the markets are a bit all over the place, and because they're dominated by such an unpredictable point, which is Donald Trump, it becomes a little bit hard to predict, right?
Yeah, I mean, this is the UK 30-year gilt.
Yeah.
So there's very specific reasons as to why this is higher. But the interesting thing about this chart is that for all of the mention of trusses, issues back in 2022, the 30-year gilt yield is actually higher now.
Yeah.
And for some reason, it's not really publicised as much. There's not as much shock about it, mainly because of the velocity of the move. It's not that the velocity actually mattered, because it was going to increase anyway.
Yeah.
But the main point here is that we are higher with interest rates that are meant to be coming down than we were in 2022.
Yeah.
Now, this coincides with sterling being at a 3-year high at the same time. And so you can see how interest rate differentials actually feed into things. But this is not a good scenario, especially for the UK, considering how bad our productivity, how bad our growth prospects are. That 0.7% for Q1 was complete nonsense, because the ONS is notorious at the moment for
making figures up,
for having to stop data releases, for data releases being revised. I think 5 of the last 6 GDP numbers have had to be revised down.
And that's actually, I know it's a bit of a teach you how to suck eggs idea, but always look for revisions when you look at these economic data, because a lot of the times that's what's moving markets. The amount of times people will say, "Oh, well, the number came out and did this, but it was higher. I don't know why markets moved." Usually it's because of revisions. But sorry, go on, carry on.
Yeah, and I think in the UK's case, we are a bit of a basket case here, especially with the Bank of England selling government bonds so heavily every Monday. Their losses are indemnified by the Treasury, so the taxpayer actually pays whenever the Bank of England sells bonds at a loss, which no other central bank does, by the way. And then they wonder why gilt yields are much, much higher and why we're in the situations we are. Because politicians and the institutions in this country are genuinely that stupid that they don't understand how anything is put together.
You've now got that fear as well that the UK and Keir Starmer was so happy about its trade deal that it had done with Donald Trump that included British steel, and now Donald Trump's kind of torn that up at the moment, and they've got no idea what's going to go on with steel.
Well, there's that, but
the tariffs are being added.
But also the trade deal, the tariffs were 3 times higher than what they were originally.
Yeah. And we spoke, obviously, if you want to hear our thoughts on that tariffs and that UK deal, you can go back and watch our episode from 2 weeks ago, as we did break that down. But yeah, exactly. The UK continues to go from strength to strength. Yeah. Anyway, it's a good job we don't live here. Oh, we do. Okay, let's go to our trading ideas. Now, the first one here is cable, which is sterling versus US dollar, for anyone that doesn't know. Now, this ties into what we've been speaking about and movements around sterling and on the back of the UK. So what's the story that we've got coming out of cable here? It's doing all right.
Well, I guess it's...
it's recovering.
It's an interest rate differential play, basically. But the issue here with cable is naturally it's not very good for any of our exports. Because it's just going to be more expensive when the US dollar is weakening and we're actually trying to increase a bit of growth. Well, no one's really going to want to be buying stuff from us, basically, with this pace of a move on cable. And so, look, every single bit of policy that is set up in this country is just really, really bad at the moment, like really bad. And it's difficult to get across how bad things are and how bad they're going to keep going. We are a complete outlier when it comes to the 30-year yield spread with the US here. It's about 50 basis points, which doesn't make any sense whatsoever.
Yeah.
You know, even European spreads aren't as big as that versus the US.
Yeah.
And so we really are a basket case of a country. And I cannot stress enough how poorly formed policy and how poor the outlook is for the UK on so many different levels. If you look at GDP per capita, we've not grown since 2018. If you look at GNI per capita, we've kind of not grown since 2007 on a real basis. And we keep having the same types of policies that they think are going to work, that are squeezing middle classes, that just won't. And so cable here isn't rallying because of a benefit. It's rallying because the perception of bond yields is that it's going to go higher because our growth prospects are so poor.
Yeah. And it's rallying because the dollar's weak.
Well, yeah. But that's beneficial for the US.
Yeah,
People are going to be buying stuff from the US. You know, so if we want to export more from the US, fantastic, we can do that. That's brilliant, but that doesn't help us. You know, that helps the US.
We're approaching, for those who can't see, we're approaching quite a big level here. Now, I should have marked exactly what that level is, but we're approaching quite a big level on the upside here, which is the highs from the early 2022, right? So we're approaching
135.
135, yeah. So we're approaching those. So there are some big levels here, but I mean, if you look at where we're going on this, it just seems ever since the start of the year, it's been relentlessly high.
Look, on the 30-year yield, I had 7.5% marked out there in January.
Yeah,
I put that up as a joke. I was joking. We're now at 5.5%, 5.6%.
Yeah.
So we're about 200 basis points away from that level that I was completely joking and laughing about back in January. Look, I talk about the UK quite a lot, but every single day I'll get more and more concerned about where it's going.
Yeah. Actually, I saw an interesting one yesterday. You know, this is probably not trading related, but you know the taxes on farmer families, right? You know, anything over £1 million is going to now be hit with inheritance tax. Now, the UK government expected that they would make £2 billion out of that. Now, the CBI came out of a study yesterday that on lack of investment and the fall in business, they think by 2030 that's going to cost the UK government 1.8 billion to 2.5 billion pounds.
It's consistent that they don't understand things. This is really, really the point. And I'm not even joking. Like, we joke a lot about it, but it's actually not funny at all.
No.
It's really, really not funny.
No, you could joke about it, but then you like leave the podcast studio and realise that, oh, I live here still.
Yeah,
and go and buy coffee for £958.
I'll give you another example about farmers. So there's massive subsidies that are provided from the government to arable farmers, large arable farmers, so they can fit solar panels onto their farms. Right now, this hasn't just got an issue with the first order effect of things, whereby there's less arable farming going on.
Yeah.
But for smaller farmers who buy their second-hand equipment, combine harvesters, they buy tractors.
Yeah.
They would normally buy those second-hand after these large arable farmers, commercial farmers, are finished with them.
Yeah.
They now have to go and spend pretty much all of their earnings on first-hand equipment.
Yeah, 250 grand for what?
250, 500 grand for some of these things. Where are they getting the money from that? And then once they've actually monetized, they're left with what? And so they ask why farmers commit suicide at such a rate.
Yeah, exactly. Yeah.
Because they don't actually make money until they sell their land.
And also, there's one other thing. I don't know if we've suddenly become a farming podcast, but there is the deal with the UK, so Brexit Part 2, the EU deal that we saw last week. One of the key points that they've got to there is the production and sale of ethanol. Now, ethanol is a byproduct of arable farming, right? And that was sold in the UK. Ethanol is in petrol, diesel. It's it cleans up fuels. Now as part of that deal is being hit in the UK because it's now 100 times cheaper to buy it from Europe because of that because of the deal. So it's another way yet again, not just British farming but British business is being hit. Well, Has there ever been a more seamless transition from farming to quantum computing?
Probably not, because I absolutely love this ETF.
Yeah, so this is an ETF that encompasses all of the companies that could be beneficial within the quantum computing realm, world, whatever we are.
Now, annoyingly, UK retail clients can't actually access US ETFs because of European regulations. So European, regulators and politicians, they have stopped you from accessing the largest wealth generating market in the world on a low risk basis in terms of being able to buy multiple companies rather than going and buying one company. So you can still buy the individual companies. You just can't buy them together.
You just can't diversify your portfolio. You just have to, put all your eggs in one basket because that's loads safer.
Honestly, and it's because they don't provide a key investor document. One document. Honestly, I want to vomit sometimes. Anyway, Quantum, obviously. This contains pretty much all of the large companies. It's dominated actually by Palantir on a weighted. Palantir is the second weight in it. The first is Qubits, I believe. So it's a stock company called Qubits. And then Rigetti Computing as well. So they're top three. Now you can see from the price chart, so we're not really correlated to anything in the S&P 500. It's got 1.2 billion in assets under management. And so it's a really sort of nice play because we're actually not really correlated to those large stocks. I would expect in the future Nvidia maybe to make more of a case in there.
From a quantum computing perspective, there's going to be developments along the way. So we can't expect that this is going to be a completely new thing where different companies come in and start dominating, because you've got the likes of Microsoft, Nvidia, and these big tech companies which are going to already be preparing for quantum computing and doing their own stuff. So they are going to benefit as well. So there's going to be upside from those perspectives. But I think when we were researching yesterday, it might have been you, Dave, so I might be completely nicking this, but in the gold rush, did you say this yesterday? Probably. In the gold rush, it wasn't the gold you wanted to buy; it was the people that were selling the pitchforks.
Yeah,
right?
you want to sell pickaxes during a gold rush, basically.
Exactly.
Effectively, because there's far less risk.
It's
like one of the best stocks out there is Caterpillar, which
always has been, right?
Which
safe
sells,
as houses.
It sells diggers. Right?
Because people are always going to dig holes.
People are always going to dig holes, no matter what. And it's very difficult to get a computer to dig holes for you.
It is.
And even if computers were to dig holes for you, Caterpillar's probably the one to create the things that the computer could be put into.
If they were trying to get a computer to dig a hole, a computer company would go to Caterpillar to find out how to do it.
Exactly.
I mean, that's a random segue. But
so it's a beautiful concept. You see so many AI companies popping up, these, software as a service AI companies. Streamline your workflows, all this, that, and the other. Who's given them all of that technology to be able to power it? Well, it's, ChatGPT and what the other one's, Claude. But then who's given them that technology? Oh, it's Nvidia. But they actually have to buy something. Whereas all of these software companies are loss makers until they maybe get acquired by one of the big companies.
And then we've got, obviously, so you've got this. The other option, if you did want to trade something that is available and you did want to put all your eggs in one basket, is IonQ, right? IonQ is a big, we don't have the chart here, but we have IonQ, which is quantum computing company, basically, right?
Yes.
So it's nice and simple and something that could that is a company selling the pitchfork.
Exactly.
So there you
Pickaxe.
go. But pickaxe, pitchfork, pickaxe. Yeah, that's why I got no gold. I got a pitchfork. Everyone's no pickaxe. James Hughes, the guy who's mining gold with a pitchfork instead of a pickaxe. Probably like a nice metaphor for my trading career. Anyway, if you agree with us, if you know more about quantum computing than us, which is probably not difficult, then please let us know. Like, comment, subscribe. But we'll catch you in the next episode in 2 weeks. So thanks for listening.